Alright, hey traders, in this video I want to compare, I've been doing a lot of study recently on the different crashes that's been happening in our history, and I want to compare charting analysis on, say for example, back in 2008 and see if we can start to pick up some basically this. I'll show you what I see on the charts. Let's get straight into it. Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. Alright, so let me just get straight into this right now, and I want to bring up, two different time frames. Okay, so we're going to bring up, we're going to bring up the Dow Jones to the left here. And we're going to bring up the Dow, obviously the Dow Jones to the right over here as well too. So what I want to do is I want to scroll back to 2008, and I want to really blow up the 2008 stock market crash. Okay, and then what I want to do is I want to bring up so this is the Dow Jones to the left weekly chart. This is the Dow Jones to the right weekly chart, and I want to show you what I've been noticing. And I noticed this with the 1929 crash and all that sort of stuff as well too. Okay, so let me just bring that up through there, bring it up through there, and I'll show you what I see. So yeah, we'll go say through there. Yeah, we'll just do it through there. All right, so with the 2008 crash, let's have a look at this here. With the 2008 crash, you can see that there's a few things that happened. Firstly, we had a big run up. Okay, now this is weeks here, big run up, and then the big run up led into a little bit of a peak here. It came down. We had this flash down through here. We came straight back up. We came straight back down, and then you can notice how it came straight back up, and then we started the falter through there. And if you notice, this is actually a head and shoulder formation. And you can see how it started to come down through there. Now it's very interesting. If you look at this through here, right? We had a big run up, very similar to that bit there. We had a run down, we had a run back up, we had a flush down, we had a run back up. If you look at this on a bigger scale, we had a run down, we had a run back up, and then we had the big move down. Okay, a big move down through here. That's probably that big move down through there. Okay, and then we spent some time going back up to the high side, creating a what? Now it's creating now a lower trough and now a lower peak, and now the market is actually coming down through to where we are right now at lows. So we can see what's happening through here, right, guys? You can see that this is very, very, very similar. So if I take everything off the screen here, and I'll show you this here. So the market ran up, created a left shoulder. This market ran up, created a left shoulder. Okay, then the market ran down, came back up, created a head, and then another shoulder. This is the head, and this is another shoulder. Now there's obviously, that could be the head and shoulder, or this whole thing definitely is, this whole thing here definitely is a massive head and shoulder formation, as you can see, right? So, and then what happens with the market? It runs down, it comes back up, creates a what? It creates a major lower peak. Okay, creates a major lower peak. But where's the lower peak? The lower peak is at this resistance level. See that resistance level? So you see how it had problems breaking through, and then it broke through, and then we went back up and we rejected off that level, and then we started to head down. Now, is that what's going to happen here? Now, if this is the head and shoulder formation, then we're likely to see, well, if we do get a run back up, this is the resistance here. See that resistance all through there? Resistance and support. Very, very, very similar, right? You can actually see that, and let me see if I can just change this. And it's almost identical. Very, very close anyway. Very, very close. But you can actually see if I go, say, let's go a red, you actually can see how the market came down, bounced back up, came down, bounced back up. And now you can see how the market flushed through. When I did flush through, you can see how it came back up and then rejected it through there. It's not exactly through here, but you can see how we had a lot of resistance, We broke up, it bounced off it here, bounced off it there, and then we flushed down. We came back up, we actually bounced off it there, and then we flushed back down. So the question is this looks very, very similar to the 2008 stock market crash. Now remember guys, when you say crash, it doesn't just happen in one day, right? Look at this here. This is 12 months worth of time. You know what I mean? And a little bit, it was going into the middle of 2007. So you could actually start to see this formation happening in the middle of 2007. You can start to see the formation forming. So hang on a minute, this is not right. We're breaking down now. Okay, what's happening? Okay, we're making a head and shoulder formation. We've broke this neckline through here. We're now starting to form lower peaks and lower troughs. What does that mean? Oh, we're now starting to form a downtrend. And in the downtrend, guys, in a bear market, that's when everything happens, right? That's when everything happens. So, meaning like that's when you start to see bailouts and bad news and all that sort of stuff. Make sense? So the thing I do say, guys, is that if we do get a rally up into this resistance level, this is likely to be where it's likely to falter, and then we're likely to see a run back down. Are we likely to? And that's exactly what happened in 2008, right? We had the head and shoulder formation, we broke it down, it came back up to try to test that resistance, and then we faltered. That's what I see happening here. Now that's if we do get a move to the high side. A lot of people have been saying that this crash is going to be bigger than we've seen in our livelihoods, you know. So me going back, you know, 1929 and you know, all that sort of stuff. So that's what I do see on the charts, guys. It looks very, 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 very similar. And if you have a look at basically the chart itself, and especially in you look at that and you can say, okay, wow, look at that. So if I go to say the monthly charts, and let me go back to say 2008. Oh, you can't really see it on 2008 on the monthly chart there. Oh yeah, you can. Let me go back here. So this is the monthly chart now, guys. And what do we see on a monthly chart? You actually can see on a monthly chart, right? And this is where it's important, guys, to keep looking on these bigger charts. Look at this monthly chart. Big shoulder. We had this head. Look at that massive right shoulder, right? It's glaringly obvious in there. And then what happens? When we actually broke this major neckline, as you can see, right, that was the major support level through there. When we actually broke that, especially on the monthly chart, then guess what happened? Oh, now we're talking. Look what happened. It ran down, it came back up, it tested it out of resistance, and then we got thumped. Absolutely thumped. Now, so that's what we can see on the monthly chart. Let's go have a look at the monthly chart here. This is comparing it back to 2008. Let's actually bring this up here. What's actually happening here? Well, it looks like maybe a head and shoulder formation, but it's definitely forming a nice lower peak, you know what I mean, and a lower trough. You actually can see it's now getting very, very, very weak. So you might call it a head and shoulder. Actually, you know what? Interesting, right? Very, very. I just noticed something. Let me see if I'll make sure I get a good color for you guys. So I'll get like this color here. Notice this, guys. Notice this. Like, if you're gonna call this is the little left shoulder. Notice it was just a little one before we ran up, and then we spent months going sideways, right? Now this is a monthly chart. 1, 2, 3. Oh, so this was 1, 2, 3, 4, 5, 6, 7, 8. So 8 months we went sideways. 1, 2, 3, 4, 5, 6, 7, 8 months sideways. Oh, do you see that? I just noticed that just then. Oh my goodness, that's pretty cool. And then we had to move down, That's pretty cool, right? So this one here, this first week here, it's 1, 2, 3, 4, 5, 6, 7. Oh no, that was 8 there. So this one here, this is the first sideways week here, so a month here. 1, 2, 3, 4, 5, 6, 7, 8. Okay, so it had one more month and then we had to move down. But very interesting, right? Very interesting. You can see that it looks very, very, very close to each other. Because if you look at this left shoulder here, And then that's like that little bit through there, right? So the market runs up, has a little left shoulder, and then runs back up. And then this runs up and then goes sideways for 7 to 8 months. This one goes sideways for 8 months. We have a move down. We had a move down. We had a move back up. We definitely had a move back up. And now we're starting to see this coming down through here. And now you can see we had this coming down through here. And you can see it's almost identical. Almost identical. And like even down to the bar, right? Because if that was the head and shoulder formation, when that happened, you can see how the market ran up, and then we had this big down bar here, this big down bar here. We can see that big black bar there, right? You can see this here. Market runs up, comes back down, comes back up, and now we have this big black bar, big down week or big down month, so far anyway, that we can see on the charts. So guys, this is very simple and very, if you just look at the charts itself and look at the weekly charts, look at the monthly charts, you start to see a much bigger, clearer picture on what the overall market is doing, especially when you're looking at that. You know what I mean? And so, yeah guys, it's just incredible, and I really wanted to share this with you, and I really hope you can see that no matter what the fundamentals are saying out there, once fundamentals align with technical analysis, like there's a lot of people like Harry Dent and all those people out there have been saying that the market's going to crash, but their timing's been off. That's where using technical analysis and understanding the charting patterns can start to give you a bit more of an edge, saying, okay, I believe in that. So I believe in what Harry Dent and Robert Kiyosaki and a lot of people say, that we're in big trouble. But the thing is that if you can tie that in with technical analysis, then the charts are going to show you when that's likely to happen. You know what I mean? So anyway, guys, I hope you enjoyed this video. See you next time. Hey, it's John Howell here, and thanks so much for watching my video. You see, I'm putting out daily videos and education on helping you learning the art of successful trading. So click on the subscribe button to keep up to date with every video I do. Also, check out my story video, $250,000 in debt, cancer, overweight, family passing away, lived on the streets, and more, and how I overcome it and now thriving through my life. This is here to motivate you, so click on that image to watch my video. And lastly, if you're struggling with your trading, then you need to see my latest webinar where I'm sharing with you an amazing strategy that allows you to generate an income without getting the direction right. So click on that image on this page to register for my next free webinar. This is John Howell here. Remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.